This is Nightly Business Report with Sue Herrera and Bill Griffin.
Tug-of-war. Stocks reverse course and make a comeback, but the bears may still have the upper hand over the bulls.
High-stakes trade talks. The U.S. trade delegation arrives in China, but can a grand bargain be reached?
Breaking new ground, a high-tech solution to the construction industry's labor shortage. Those stories and much more tonight on Nightly Business Report for this Thursday, May the 3rd.
Good evening, everyone, and welcome. Is your head spinning? Because that's the kind of day it was on Wall Street. The Dow was down nearly 400 points midday, and just when it looked like the bears were in control, stocks erased most of their losses. When all was said and done, here's how the market closed. The Dow Jones Industrial Average rose 5 points to 23,930. The Nasdaq was off 12, and the S&P 500 fell nearly 6. Bob Pisani has more on this whirlwind day on Wall Street and where stocks may go from here.
These days, you can go through an entire investment cycle in just one afternoon. Just look at what happened today. We opened down, but when the S&P broke below a key technical level, the market swooned, with the S&P falling more than 20 points over the next half hour. But then around lunchtime, the market just turned around, and investors appeared to be trying to buy beaten-up sectors. So sectors that have had the worst price momentum in the past 2 weeks. Consumer staple stocks, industrials, semiconductors, even gold. It all rallied into the green in the middle of the afternoon. Now, that's good news. It suggests there are attempts by some traders at finding at least some short-term bottom. It's about the only good news the bulls have had in many days. Earnings have been way better than expected, but the market has yawned. Bears are claiming the market should sell off because the Fed is raising rates and we're entering a seasonally weak time of the year. Now, all of that might be surmountable, but the bears have recently made two claims: that global growth is slowing and that inflation will pick up more than expected. Now, that would be a big problem for stocks. Bulls insist global growth remains strong, but for the moment, the bears seem to have the upper hand. For Nightly Business Report, I'm Bob Pisani at the New York Stock Exchange.
So will the bears continue to have the upper hand? Joining us tonight to try and make sense of all of this, lucky him, Kevin Caroni's portfolio manager and co-founder of Washington Crossing Advisors. Good to see you again, Kevin. Welcome back.
Thank you for having me.
This is a great environment, you would think, for the stock market with earnings as strong as they are. Rates are still relatively low, even though they have been rising a bit, and we've got unemployment at record lows as well. So what do you think is going on here? What's the market trying to tell us?
Well, I think the market is actually doing the investors a favor in a sense, because put it in context, we came into the year with tremendous momentum with the market surging. And as we came through the spring, we have seen some choppiness. But that's a reversal from a really strange 2017 when volatility was extraordinarily low, and asset prices were moving very rapidly as earnings were coming up underneath it. But I think that where we are now with the market moving sideways and earnings surging, valuations on stocks are actually looking more healthy than they were just a couple months ago. So that could be a good thing going forward.
So it sounds like longer term you're bullish, but we probably still have a little headline risk?
Yes, I think that ultimately, as long as we avoid having a further slowdown in the economy, you just mentioned some slowing in the global economy the last couple months, as long as as the economy holds up and earnings continue to advance as expected, analysts are looking for 7% growth this year, I think that we can get through this very nicely with stocks outperforming bonds, even though bond yields have been backing up here.
Sector-wise, where do you see the best opportunities right now in the equity market, Kevin?
I would go and look for very steady companies, and I like the fact that consumer staples are just that, and they've underperformed faster-growing segments like technology the last couple of years. So when you look at relative valuations, I think that consumer staples are actually one of the more interesting places to go these days, even though the growth rate is lower than what you would find in, let's say, technology.
Kevin Carone with Washington Crossing Advisors. Always good to see you. Thanks again for joining us tonight.
Thank you very much.
And to the economy now, the trade deficit narrowed sharply in March. Exports increased to a record, helped by a rise in deliveries of commercial aircraft and soybeans. According to the Commerce Department, the trade gap dropped more than 15% to $49 billion. That decline ends 6 straight monthly increases.
And that same report showed the U.S. trade deficit with China also declined, just as the president's top advisors arrive in Beijing for their high-stakes talks on how to avoid a trade war between the two economic superpowers. Eunice Yoon is covering the story for us tonight from Beijing.
Treasury Secretary Mnuchin and his team have wrapped up their first day of meetings with the Chinese. They were greeted by Vice Premier Liu He. Liu is a trusted advisor of President Xi Jinping with sweeping powers over the economy. There is a lot at stake since a trade war would be costly for both countries. However, there's a feeling that it will be challenging to get a grand resolution. Secretary Mnuchin and other U.S. officials said before they left that they wanted to talk about and make progress on a range of issues, like cutting the trade deficit, forced technology transfers, and China's industrial policies. However, China's industrial policies, for one, are core to Beijing's national economic agenda, and getting the Chinese to agree to change their practices will be very difficult. The Chinese, through official statements and the state media, have been sending two conflicting messages. On the one hand, they want to appear conciliatory. The China Daily, a state paper, today ran an editorial with the headline, "The art of a deal is when all parties are happy with it." On the other hand, they want to show that China has leverage and won't back down. Chinese state TV highlighted today that importers here completely stopped buying American soybeans in the past 2 weeks. Also, my sources in the Chinese government have told me that unlike in past trade negotiations, there wasn't a lot of preliminary work this time round. The standard has been that working level folks get together, they hash out all the details before the senior officials arrive. So there's a big question as to just how much they can accomplish in the short period of time that they're here. For Nightly Business Report, I'm Eunice Yoon in Beijing.
So what is expected to develop from these talks, and what should the U.S. focus on accomplishing? Here to talk about that is Ed Mills, Washington policy analyst and managing director at Raymond James. Welcome back, Ed. Nice to see you again. We always have you on when we have these high-stakes situations come up, and this certainly is one of them. Eunice just pointed out something interesting, that they haven't had the pre-meeting working groups in China. So given that, and given the expectations, will we see this grand bargain or not?
I'm skeptical of a grand bargain. I think that the best case scenario for right now, what we would hope for, is to kind of lay the ground, making sure we actually have some of the first meetings between kind of our kind of leaders of the economy and China's leaders of the economy. I continue to believe that the headline risk here is going to get much worse before it gets better. I still think there's a lot of distrust on both sides. I think Trump really feels that he has to keep on hitting back and hitting back hard. And so that's going to be really difficult to get a deal near term. And don't forget that sooner rather than later, Congress is getting involved here and is starting to look at legislation that could be anti-China, which could blow up these deals. It's a hard thing to keep that fragile flower of consensus together. Lots of reasons why a grand bargain can't happen just yet.
We all know China is a hybrid. They are a communist government. They are a capitalist economy, sort of. They don't worry about subsidies to industries like steel. But we do, and we feel that's unfair. Secretary Mnuchin has said he doesn't want to change the Chinese structure as it is. But if you don't do that, how do you come to an agreement of some kind?
Yeah, I think it's very hard. I think what we're actually waiting to see from Treasury the most is they are, as part of the executive memo that the president signed, Treasury has to come up with a list of investment restrictions on China in specific technologies, in different industries. And China has this list of things that they want to be the worldwide leader of by 2025. And so that's the Chinese subsidies that are going to go to those domestic, industries. And what I think Treasury is going to say is, does the U.S. have technology that they need to meet those goals? And why are we going to give that to them? And so that's real leverage from Secretary Mnuchin's standpoint.
Right. You just mentioned the fact that Congress is getting involved and Treasury. Does that mean that there's market headline risk if things are going to get worse before they get better?
Yeah, I mean, this is the number one thing I'm talking to clients about right now. One of the things that we're concerned with is that too often we don't know exactly when the next shoe to drop is. And what we look at, kind of the required things that are coming out of Treasury, Treasury could use something known as IEEPA, which is wartime powers to restrict commerce. And we're going to say, are there things that China's trying to be a global leader of? Semiconductors, AI, looking at kind of the build out of telecommunications technology to get 5G. And if they came out with a list and saying no U.S. company can do business with this, the market is not going to like that at all.
Right.
And if Congress follows up, that's a bad 1-2 thing.
Ed, thank you so much.
Pleasure.
I think, given what we've laid out. Ed Mills with Raymond James. Bill?
More economic news now. New applications for jobless benefits inched higher last week, but the rise was less than expected. According to the Labor Department, initial claims for unemployment benefits rose 2,000 to a seasonally adjusted 211,000. And despite the increase, claims remain near historic lows, pointing, of course, to a robust job market.
And the monthly jobs report is due out tomorrow. The unemployment rate is expected to tick even lower to about 4%. But a persistent problem lies behind those national employment numbers. Many young people who could work are not, and they're not attending school either. But now a coalition of corporations is trying to help get them hired. Kate Rogers reports tonight from Atlanta.
Thousands of young people packed the Georgia World Congress Center, eager to join the workforce. Big companies from Starbucks to FedEx and Bank of America are banding together to give them an opportunity.
If they do give me the time of day when I do interview, then I'm pretty much going to knock it out the park.
Across the United States, more than 4.5 million people ages 16 to 24 are currently not in school or working. The 100,000 Opportunities Initiative hiring fair wants to change that with the help of company recruiters and executives like former Starbucks CEO Howard Schultz. Fairs have been held across the country, and this band of companies is committed to 1 million hires by the year 2021. At FedEx, executive Shannon Brown says he knows the value of opportunity, having been given one himself at the company some 40 years ago.
We know these are the leaders of organizations tomorrow, and the best we can do to mentor them and help them grow within an organization is going to be better for FedEx for the long run.
Job seekers here will get advice on what to wear to interviews, a look and some help with their resume, and even some on-the-job training for would-be baristas. All right, like this?
Yank it.
Starbucks Chief Operating Officer Rosalind Brewer says when the company hires young, workers tend to stay and rise through the ranks.
I drink coffee every day.
It begins our conversation about who do we want to employ in our stores, and we want to give everyone that first chance, and they need these opportunities. This is the part of our country and our nation that usually gets forgotten about.
And for some attendees, the day has a happy ending, leaving with a job offer in hand.
He's like, I like your smile. I think it'd be great for the company, so it was like really nice.
For Nightly Business Report, I'm Kate Rogers, Atlanta.
Time to take a look at some of today's upgrades and downgrades now. Caterpillar's rating was cut to neutral from overweight over at Bank of America. The analyst there cited a slowdown in monthly retail sales. Price target was $156. Shares of the Dow component fell a fraction to 143.78. Fellow Dow component 3M saw its rating raised to outperform from sector performant RBC Capital. The analyst cited an attractive valuation after a 4-month swoon for that stock. Price target now $238. The stock closed today at $195.68.
NVIDIA's rating was raised to overweight from equal weight by Barclays. The firm cites increased demand for semiconductors over the next several years. But the analyst admits that he's behind the curve on this call. The price target is $280. The stock rose nearly 3% to $232.99. Salesforce was upgraded to market perform from underperform over at Bernstein. The analyst cites the company's ability to generate better revenue growth. The price target there is $125, and that's right about where the stock closed today at $124.41.
Still ahead, why Goldman Sachs, the most storied name on Wall Street, may soon start trading the controversial cryptocurrency Bitcoin.
The former CEO of Volkswagen has been charged by U.S. prosecutors with conspiring to defraud the U.S. The charges against Martin Winterkorn are related to the automaker's diesel emissions testing scandal. The indictment was unsealed today. Winterkorn stepped down as CEO in 2015. He is in Germany right now, and he is not at this point in custody.
Activision Blizzard reported double-digit growth in both revenue and profit for the most recent quarter, fending off competition from that hot new rival game called Fortnite. We'll talk about that in a moment. Activision earned 38 cents a share. That was 3 cents better than estimates. Revenue rose by 15% to more than $1.3 billion. And the stock closed the regular session lower despite an early release of that better-than-expected report. Julia Borston has more for us.
Activision Blizzard reporting better than expected results, showing that the growth of Fortnite from rival Epic Games is having no impact. In fact, Activision Blizzard's own digital businesses are thriving. The company hitting record first quarter revenue from digital, mobile, and in-game transactions. CEO Bobby Kotick saying, quote, "As we look ahead, our innovative core gaming pipeline, as well as initiatives like mobile, esports, and advertising, will continue to drive growth for our business." The company just launched its inaugural regular season of Overwatch in January, but says it's reaching millions of viewers every week, which has led to increased hours playing the game. And more growth is expected ahead with the playoffs coming this summer.
Some expected rival game Fortnite to pose a big threat to companies like Activision Blizzard and others. It's a game that just a few months ago, few had heard of, but it quickly became one of the most popular games out there. Julia is back with a look at Fortnite's fast rise.
Fortnite is free to play and accessible across consoles, PCs, and iOS mobile devices. You can play with your friends. As many as 100 players can participate in the Battle Royale mode. Plus, in addition to traditional first-person shooter game features, players can pay for fun add-ons, like costumes and dance moves for their avatars. Fortnite's success benefits private game maker Epic Games, of which Chinese Tencent owns 40%. Disney also owns a percent of Epic, acquired by hosting Epic in its startup accelerator last year. And Amazon's Twitch saw its March traffic surge 40% thanks to Fortnite, the most watched game in Twitch history. For Nightly Business Report, I'm Julia Borston in Los Angeles.
Cardinal Health shares turned sickly, and that's where we begin tonight's market focus. The drug and medical supplies wholesaler reported a sharp decline in profit, and it lowered its full-year outlook. Company cited inventory that could not be sold and drug price deflation. That sent the stock down more than 21%, its largest percentage decrease since 2004. It closed at $50.80. Health insurer Cigna reported better than expected quarterly profit and raised its full-year outlook, but the results were overshadowed by regulatory concerns related to its $52 billion acquisition of Express Scripts. The CEO, though, says there's no need to worry.
Our two companies are truly complementary of one another and don't have material overlap.
Cigna shares finished up a fraction at $172.88. And Teva Pharmaceuticals raised its 2018 outlook, citing progress in its restructuring plan. The world's largest generic drug maker reported a smaller than expected decline in its first quarter profit and revenue, and said it expects its new migraine drug to be approved by the end of this year. Still, Teva shares finished down more than 4% at $17.78.
And after the bell, CBS reported better than expected profit, and its quarterly revenue hit a record. The media company, which is in merger talks with Viacom, was helped by strong ad sales and affiliate subscription fees. That sent shares up initially in after-hours trading. Shares finished the regular session slightly lower to $48.74.
Let's turn now to the topic of Bitcoin. While many large banks have been keeping their distance from that cryptocurrency, Goldman Sachs just a few months ago said it was at least open to it.
I will tell you, I have not, it hasn't crossed my desk to set up a Bitcoin trading desk, but I wouldn't preclude it. I get asked questions, is Bitcoin the worst thing in the history of the world? And I have to say, I don't know. I mean, I have more open mind about these things because there's a lot of things that work really, really well today that I thought were stupid and wrong. And I mean, I have a much more open mind about this.
Well, now the investment bank is embracing Bitcoin. It has announced it's going to launch a trading desk dedicated to it. The question is, does such a move by a large, highly respected bank begin to legitimize a largely unregulated virtual currency, one that has been called everything from the future of money to a fraud? And will other banks follow suit? Joining us tonight, Campbell Harvey is a professor of finance at Duke University's Fuqua School of Business. Good to see you, Professor. Thanks for joining us tonight.
Great to be on the show.
What a crazy trend this is. You know, you have so many proponents on one side who are highly respected and people on the other side who are also highly respected. What do you make of Goldman Sachs' move to open a trading desk, and what impact will that have on all of this?
So it is no surprise to me whatsoever. And what is under the radar screen is that this is part of a longer-term plan that Goldman had. They were an early major investor in a crypto startup called Circle in 2015. And Circle's got an exchange. So they've been in this game under the radar screen for 3 years. And this is the culmination of that strategy. They cannot ignore a market that is like a $500 billion market. They got to be there. And I think they cannot wait for the fintech firms to eat their lunch.
You know, there are those who say that if anybody's going to do it, it should be Goldman Sachs because of their history with risk management and their reach. Do you agree with that?
Yeah, absolutely. Again, they've got this longer-term vision. They're known for innovation. They see the threat of fintech. They see this as a major market. They see that a firm like Coinbase has got nearly 20 million customers and probably making $50 million a day just in fees in trading cryptocurrencies. So how can they not be in this market?
Right. But what's the message this sends to individual investors out there who may be intrigued by all of this, and now they see Goldman Sachs getting involved?
Yeah, so one of the problems is not just individual investors, but it's institutional investors. We have some futures contracts that are available on Bitcoin, but they're very small in terms of volume and problematic for institutional investors. They've been waiting for an A-level investment bank to pull the trigger. Obviously, JP Morgan wasn't going to pull the trigger, but Goldman was there to step in. This makes it a lot easier to trade this market, and I think we'll see much more participation and kind of validation that this is a real thing.
Something to keep an eye on, that's for sure. Campbell Harvey at Duke University, thanks again for joining us tonight. Appreciate it.
Thank you.
And coming up, we'll show you a new way to build homes.
A new startup is taking real estate construction out of the job site and into the factory, saving on costs, labor, and increasing productivity. We'll tell you about it coming up on Nightly Business Report.
Mortgage rates pulled back just a bit after hitting multi-year highs. According to Freddie Mac, the average rate on the 30-year fixed-rate mortgage dropped to about 4.5%. Analysts believe this is likely a temporary reversal in a year that will bring steady increases.
Well, the construction industry, as we know, is facing a severe labor shortage, and it couldn't come at a worse time. Workers are needed to build homes to help alleviate the severe housing shortage we have seen. But what if there was a high-tech solution to build more with less? That's just what one company is doing, and it's getting the attention of both developers and investors. Diana Olick is in Phoenix for us tonight.
In an unassuming Phoenix factory, a team of techies is upending the way buildings go up.
Further to the right, we have our cabinet shop.
Using high tech to build efficiencies for design, material supply, manufacturing, logistics, and assembly. The goal, remove time, cost, and especially labor from construction.
In my past, we built electronics components. We built telecom infrastructure. Today, we're taking the very same principles and really applying that to the components that go into building, and we're building them inside of a factory instead of out in the field.
Katera is barely 3 years old, but already changing the face of construction, seeing building components as Legos, simple but filled with creative opportunity, especially when designed using virtual animation. They put large sections of a house or building together in the factory, Windows, doors, sheetrock, a full kitchen, all done. And then send those parts to the job site for assembly. Managers on site follow instructions on an iPad.
Because we have sourced product and an amazing catalog here, we're able to select the finishes for a project very quickly. So we can do a full multifamily project within about an hour.
Katerra's founder and CEO Michael Marks used to head up Flextronics and spent some time at Tesla. He claims it was not a difficult transition to construction.
It's not like a visionary breakthrough. It's just applying manufacturing techniques, if you will, to the construction industry, which just doesn't have them.
The company recently got an infusion of nearly $1 billion from SoftBank, bringing its total value to about $3 billion. And they just announced they're acquiring a construction company in the Northeast, building on a model that is clearly working.
We need to add some more because we're winning business everywhere. We need actually the people to build them. So we're just growing at a breakneck pace.
Katerra has over $1 billion in projects in the pipeline, all of them unique. Unlike prefabbed housing of the past, technology takes the cookie cutter out of the mix. For Nightly Business Report, I'm Diana Olick in Phoenix.
And before we go, a final look at the numbers today on Wall Street. The Dow rose 5 points to 23,930. The Nasdaq was off 12, and the S&P 500 fell nearly 6. And that will do it for Nightly Business Report tonight. I'm Sue Herrera. Thanks for joining us.
And I'm Bill Griffith. Have a wonderful evening. We'll see you tomorrow.